Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. We're talking on Data Dump Wednesday. I think that's the best way to describe everything that happened. Lots of information outside and inside agricultural information being passed along. So we're going to kind of unpack it all and find out why this is kind of a correction type of Wednesday and what we're seeing moving forward. Brad did a little bit of digging. We've got some cattle inventory information we're going to take a look at as well. As you heard me just mention him, Brad Kooima. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. And let's talk about why you call this a correction day.
Hey, Susan, thanks for having me on. Glad to hear you're getting a little better. Well, again, to me, the market, at the risk of sounding sarcastic, which why wouldn't I be, right? It seems like the market gets caught here in these in between floors, in phases, whatever. So if we don't have some really blistering good cash cattle news to tell the market, then it kind of goes like, well, I not heard anything good today. That old saying, a bull has to get fed every day, a bull market with good news. There's still some truth to that. Then when there isn't that news, then the market seems to sag back into that same old fret about something demand related, whether it's bird flu or whether it's something else that the market regresses back to. But to me, yesterday, the big up day, of course, on Monday, and then a little pullback yesterday. I love the fact that the cash market is the boss right now. The fact that the futures market trading at extremely steep, unusually so steep discount. I mean, 193 was the market up here late Friday in Iowa. And those cattle are dying yesterday and today. That's my experience. They're mine. I'm referencing some of my own cattle. 193, it's the all-time high. Not too shabby. So like 2014, we continue to trade at a steep discount, dragging the futures like can't hardly believe it's going to be any good, right? Along with it. And that's just fine. I think that's a real healthy structure. It keeps us all current. Keeps us from paying maybe too much for feeder cattle, even though, of course, they're very high, and those guys that raise them deserve a big price too. I think I'm going to call it correction because I don't see any blinking here in the cash market here yet at all.
So we had, and I talked at the beginning about it just being a data dump, and you talked a little bit about CPI, but whenever we talk about the WASD, everybody seems to focus on the grain side of it and not the livestock side of it. And it looked like some decent information for the cattle.
Well, a good point. I would probably give a little disclaimer. Typically, we don't talk a great deal about the livestock because there's a poultry number, a hog number, a cattle number. They made some reference to the fact that even though supplies are declining because the average weights are higher, which we've talked about ad nauseum, have we not? That beef production has remained almost unchanged. So that was part of the report. But the CPI, and of course, feels like there's an economic report about every other day, right? But that's got the stock market into new highs. Heaven forbid. I put gas in my pickup this morning. It was $2.99. You don't suppose people would feel like economy's pretty, stock market's pretty good. Gas is cheap. Maybe let's go get a ribeye, right? So there's some of that background stuff that still makes me very encouraged. And I'm hearing some talk that there's some fully steady bids offered already in the South that are getting passed. It's only Wednesday. I wouldn't expect much trade here until the end of the week. And usually the longer it waits, the better it gets. That certainly was the case last week where we didn't trade cash cattle here till 6:00 on Friday night. So I still think the fundamentals of the market are solid, but we're at a big price. I get it.
So let's get into the data that you've been looking at when it comes to cattle inventory. And I think some interesting information. And again, throw a disclaimer. This is something that you have been talking about since October of last year.
Well, you're very kind. Thank you. Everybody remembers when you're wrong, right? And very few when you when you maybe are a little closer to right. Let's back this thing all the way back. Everybody remembers that great big break we had last fall, right? We had that surprisingly bearish October and November cattle and feed reports, bearish relative to the placements. And the placements that they found were exclusively in the north, particularly Nebraska and Iowa. Huge placements back there. And you're going like, it just doesn't feel like that's the case. I mean, I've got a lot of people I know in Nebraska and connections and feed there and up here, of course, after being as old as I am. And then I'm going like, boy, it feels like we placed some calves, but to say we placed 12 or 15% more. Sure doesn't feel like it, so this is a long time ago now, right? And so I did a little work here at I can't show you the graph, I apologize, but take my word for it, of compiling all of the cattle, whether it's negotiated cattle in Nebraska, formula cattle, grid cattle, basically all the stuff, contracted cattle. And I would, this is what the chart looks like, okay? And this is what it usually looks like. So this is the time of year, if you're a calf-fed state like Iowa or Nebraska, South Dakota, this would be the time of the year when you have this big increase in numbers. It's the middle of June already. And instead, that it's very contra-seasonal, it's less. Now, people might get an argument with me on this deal, but to me, the weather, we had 2 weeks of winter in January. And after that, the weather has been really, really good. No mud in the spring. Probably the best March for feeding cattle that I can remember ever. April, same way. And so these cattle are performed. I think a lot of us have already actually sold a lot of the big calves. And I just go back to what your kind softball question is I don't think they're out there. You've heard me say this, the beginning and the end of all markets start in Iowa. Nothing against you, Nebraska folks, but and I think what that means is if you are very current and tight in Iowa, probably market's all right. Unfortunately, it's the other part of that usually is the truth, and that's where the farmer feeder sits up here and he fights the market. He's not current. He's got big cattle. And this is where we do all the negotiation, right? So this is where everybody's focused on, and that's a bad market, and that's when we get in trouble. But we're on the other side of that slice of toast now, and so nobody's going to convince me that we got a problem with supply here, not for a while. Maybe when we get later in the summer or something like that, but right here I think we're in really good shape.
So curiosity, as we get ready to wrap this up, we're now into might as well say getting ready for mid-June. This is where we're going to start seeing a lot of those sale barn sales, those special feeder sales taking place. Do you think those numbers will be down as well going to the sale barns, considering what the data is that you've seen?
Should have been a little more prepared. I've actually done a study. Well, I have college interns do it for me, but I can get good data from the South Dakota barns. And it's black and white. We are down year on year. We were down 28% from a year ago and down something more like 40% from 2 years ago. Now you could say, well, maybe there's more private treaty, maybe, but it is glaring. The couple of big specials that they had here the last little while, of course, everybody's talked about Fort Pierre Friday, Kimball, cattle brought record prices in a lot of cases. So this is a little off topic, but not really. So a lot of cattle get sold on videos, right? Video auctions, Well, there was one of the big spring video auctions was Monday and Tuesday. Okay. And 62,000 cheating here. I'm looking at the catalog, 62,000 head. Okay. And it was a 2-day sale. I remember when they sold 170,000 and it was a 4-day sale.
Right.
Okay. Now, maybe some of these cattle are going somewhere else. Maybe they're finding a better way to sell them or a different way to sell them. But you can't kill cows for 3 straight years and have the same amount of supply. I guess we're there, in my opinion, in terms of that, where we're finding the dog has run to the end of the chain, in my opinion.
Well, hopefully it's able to kind of recoil back a little bit. We can start seeing some of those heifers and cows staying home.
That's the whole key. Let's figure out that day where we can go on the show and say, I'll stomp my hand and say, yep, but it won't be that clear. It's regionally happening. It's happening in the north. I know there's been some heifer retention across what I would call the traditional north, the Dakotas, the Wyoming, Montana, Colorado. Now I visit with some of these guys that I buy some cattle out of the southeast, and not so much, and I don't know why. They've got a lot of cattle down there in the hills down there in Kentucky, Virginia, all the way into Florida. So, it's not it won't be that easy. You won't flip a switch and know until it's over.
All right. Well, great conversation today, Brad. I'm looking forward to next week's. What's the best way for folks to get a hold of you?
The phone number 712-722-0023 or hook us up on kkvtrading.com. Thanks, Susan.
Thank you. Brad Kooima joining us this week. A quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.